Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll top wire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Go back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh man, I haven't turned on my other light. Hold on a second here. That's much better. Okay, guys, welcome back. It's Tuesday. I hope you guys had a good holiday. Let's see here. Do we got everything set up right? I think we do. I don't know. Something seems off right now. All right. Well, anyways, let's go to the charts. Check out over here. Close that. Oh, do we have auto rollovers? Okay, let's fix that. So, yesterday ended up being a little bit of a bull day. It wasn't too much, just kind of like retraced some of the overnight session and everything. This morning in the overnight, a little bit of a push up further. Treasuries, kind of similar, a little bit more on the sell side, but quite more gentle over here. Oil taking a huge hit on Friday, right? Think that oil will break 100? I don't know. The awfully volatile, could probably go just about anywhere. It's a little hard to predict oil right now. Gold and silver. Yeah, it could be worse, right? Yeah. Kind of right now, actually, kind of just uninteresting action in oil. Copper, though. I'm hoping we're getting a turn here in copper, because copper is an important one. An important measure of the world economy. And then we got Bitcoin. Bitcoin over the weekend dipping below 20,000, but only very, very briefly. Something I see going on over there is that there is so much interest in that 20,000 level that like whales are trying their darndest to make sure that that level holds, because they're all worried that if it takes another step lower, that there's just a whole nother wave of pain. And then we got the dollar 103.8. Well, it's been here for a while in the dollar, so I don't know. So I think I'm a little bit behind here today. Autolycus, how are you doing? Good morning. I don't know what's up with YouTube. It's normally we start out with 4 or 5 viewers, but I am public and everything, so I think we're okay. Now it changes too. It just kind of makes me, sometimes I'm like, am I being throttled? Am I, that sort of a thing. Okay, so let's come over here. I'm gonna make sure that I got my news squawk and everything going here. Southwest Airlines continues to experience strong load factors and bookings for the summer. Good. Let's see here. 610 Treasury option flow in the T-note expiry 114 even /113. So lower than here. Put spreads see 30K traded through the session for 2 up to 3. That's interesting. So there are some people placing some bets here in the treasuries that say that they're going to continue to move lower, but that's not the driving factor at the moment. Okay, let's see here. Today we get existing home sales. I need to come in here and make sure I'm acquainted with what we got going on this week. Tomorrow, Chairman Powell speaks at the semi-annual Monetary Policy Report before the Senate Banking Committee. Okay. And Thursday, unemployment claims. Wow, it's going to be a fast week, huh? Consumer sentiment on Friday. Okay. Well, interesting. I'm going to come over here just real quick. Um, so do U.S. opening news. Oh, it's going to give it to me as a PDF. There is some interesting things going on over in Russia right now. Maybe we can talk about that a little bit. Erratic awaiting the return of U.S. cash markets. Treasury futures retreat in curve flights from marginal flattening to steepening ahead of U.S. existing home sales data at 8 o'clock. Okay. U.S. Secretary Yellen says she does not see resuming the XL oil pipeline as a short-term measure that can address high oil prices. Well, she added it would take years to have an impact. Well, okay, that's true. She also commented that evidence is mixed on the level of pass-through from a gasoline tax holiday to lower prices and said that exception or ban on insurance for certain oil shipments would effectively provide a price cap on oil. Bullard says he expects the economic expansion to continue this year and that the Fed must meet market expectations for rate hikes, while he added that the effects of Fed guidance on the economy and CPI are taking hold. Bullard also stated that high inflation has come up like a storm and the economy is slowing to the trend rate of growth, as well as noted that the current balance sheet reduction is a good place to begin with and that they may not need to go as far on quantitative tightening as it might seem. Secretary Yellen said tax cuts were not successful in boosting private investment at 2017 tax cuts, and the goal should be equitable and sustainable growth. Yellen said that once some countries implement a global corporate minimum tax, other countries will follow suit or lose revenues, according to Reuters. That whole thing is, I really don't like the global minimum tax thing, but they're doing it. Okay, so we are getting some bullish action here in the Treasury. I don't know about this one. It feels to me a little out of nowhere. Well, since they didn't really give me anything significant to run off of today. Let's come here. The difference between a forecast and a guess. What? Kellogg shares jump on plans to split into 3 businesses. Futures crypto surge as dip buying turns into nasty squeeze. I do kind of, I think, actually, hey, I don't know if 37.35 is the best spot. I think if there's a trade that I would like to make today, it's maybe in the equities today. I'm not so sure about what the treasuries are supposed to do here. They look like they're pushing up pretty strongly, but it's a little. I'm not actually seeing like super strong volume with it per se. It's just market makers not holding prices again, right? So I don't know. We follow this trend here in treasuries, but ES could turn into a really lovely short squeeze today. Is it gonna go? Looks like it is. I don't know. The action in the 10 years seems to be screaming to me, go long, but I just can't seem to get myself on board. Every time that I say this, though, it keeps going, right? When I say something like that to myself, it often keeps going. Well, but I'm really just not. Man, I've caught something. My nose is a little runny. I don't think it's just allergies either. 03. See, 275 wouldn't have been bad, would it? Yeah, my phone not charged last night again. It's hot in here today too. All right. Well, the news squawk at least is picking up on the change. Okay. I'm just kind of checking on everything here, making sure I didn't miss anything. How dare you start talking about the Greeks, Vincenzo, dude? Wow, Tony King had come in on that video and gave a very, very oozing review of our video about how to take advantage of options gamma hedging. I think that video's been doing well. Let's come over here and look at the stats on that. I mean, that video was a lot of work, by the way. So I'm really happy that it's doing well. Yeah. So on the higher end here, it's doing very well. And that's on its own too. Yeah. Oh, actually, it did give us a little bit. We did get a few from Facebook. I tried posting it to Facebook and they said it wasn't related to futures. I'm like, okay, whatever. Whatever. Will it show me? No, I don't get retention numbers yet. Oh, well. Oh no, it closed my made a boo-boo there. Do you reset your volume on Jigsaw 820? I do. Usually. Kind of depends. You know, like, so the way that you change it, right, in Jigsaw is when you come in here and you set your session. But I set it to the CVOT session, or at least my tenure, it's set to the CVOT session. So, yeah, like, here's the thing. Again, I'm very anti-technical analysis. The logic that people tend to use for technical analysis is flawed. Okay. This past data does not have any proven ability to predict future data. So when I come in here on the volume profile, like if I come over to this chart, for me to come in and to say, well, yesterday's point of control, it was at 116.08 half. So that means that that's where we're going to go to. Well, there might be some historical probability that it does that, largely based on what the range is, right? Because that's so close, good chance that we could touch it today. Because just about any standard size move in treasuries will probably hit that. Would probably also hit down below us 115.23.0, right? So that's just the volatility, right? But there are these distributions in the volume profile that are, to get a distribution like that, it's not just a random distribution. Okay. So there is some information that we can pull out of it. It's just don't apply technical analysis to it, right? So for me, when I'm coming over and I'm looking at these volume profiles, the useful thing to me is to try and sort out and or remember where liquidity holes are and where they're kind of rotating around. So if we move up, let's say that we move up and I see some stuff at 06 and large transactions that occur there, and then suddenly no liquidity there. Okay. That's a really good sign that they've created a liquidity hole that we're going to rotate around that rise. And then I'm going to expect to see a volume profile developed around there. So I'm going to want to see the volume profile. But that's a good reason to not really care or show about what the overnight volume profile data was, right? Because it's new positions, it's new people, and I only care about what the positions are since we started the regular session and the real significant large traders started trading. It's the same reason why I do it for the ES. I reset it when their session starts. Okay, well, if I had tried going along with that trend, I would be very unhappy right now, wouldn't I? I'm not necessarily seeing any reason for the NIO shares up on strength of new luxury SU. What? I thought that company was left for dead. Lisa Abramowitz. The pace of Bank of Japan buying has accelerated further. The monthly run rate is now double the pace of buying at peak Abenomics at around 20 trillion yen of government bonds. It is the GDP equivalent of the Fed doing 750 billion of monthly QE in the US. Ooh. Former Vice President Mike Pence declares nation is on the wrong track during visit to Chicago. Okay, so you want to know something that's really irking me right now? So the interesting political questions that I see on the horizon, like if I was, looking to make bets, is will Donald Trump run? Will Mike Pence run? Etc., etc., etc. And when you go to the predicted markets, they have markets on this, but it's will Donald Trump announce a run for president in 2022? No, he's not. They're going to wait. You're going to wait until 2023 to make any kind of announcement. You doing it right now before the midterms is way too early. So the answer for that one is like a strong no. It should be, does he ever announce? Ever, right? So we don't really get to see what the market really believes about, will Mike Pence run? Will Donald Trump run? Will DeSantis run? It seems to me, if you go to the market about who's going to win for president in 2024, market seems to think it's going to be DeSantis. Donald Trump is now the underdog, which is interesting. I really don't think Donald Trump's coming back. And that right there, seeing Mike Pence declaring that the country is on the wrong track. I mean, what is he doing right now, right? That is he. I don't think that he's going to be running for like governor or senator or anything like that. I think that he's going to run for president. That's the behavior of somebody that wants to run for president. Just saying. Financial Times. Terraform crypto collapses, lessen pressure on banks and regulators. No, I think the exact opposite. I think that the crypto collapse and the amount of money lost by investors puts more pressure on regulators to start regulating cryptocurrencies. That is the most insane wishful thinking I've ever heard. Yeah, well, it's cryptocurrencies, of course. That's what they can do. Let's see here. Yanir Bar Yam, extremely important paper on outcomes of COVID reinfection. Compared to those with first infection, reinfection led to increased risk at 6 months of mortality by 2.38%, hospitalization of 9.5%, and post-COVID medical events 19.6%. Oh, that is weird. I'm a little skeptical about this paper. Let's read this. There's a big iceberg there at 115.30. Participants with no reinfection were the control group. I think the issue is those that are likely to get reinfected are likely weaker. Controls. Yes, positive and negative outcome controls. We conducted a positive outcome control analysis to examine whether our approach reproduced prior established knowledge, testing whether the association was associated with risk of fatigue. Results showed compared to non-control, then negative outcome control analysis to test for potential precedence of spurious associations using the same data sources. Okay, they did not go into much detail about how they looked at covariates. You can downvote replies, eh? That's troubling that vaccinations didn't reduce the risk of adverse reinfection health outcomes. Hmm. Yep. All right. Somebody already said exactly what I was thinking. Those with 2 infections had an increased risk of at least one sequela. those who had been infected twice are also more likely to be at higher risk. Yeah, probably. Probably. Because they're saying like this means that herd immunity doesn't work. If herd immunity doesn't work, then that would mean that we would all still be catching it, right? So I don't think that passes the smell test. That interpretation of the results, not the study itself. I think that Nassim is jumping on something he's already like misinterpreting. He's already misinterpreting it. Have you ever thought about the relationship between the VIX and the resting orders? Why, yes, I have. It's they're very clearly correlated, aren't they? The VIX seems to be pretty well tied to the resting liquidity. But for treasuries it would be more move or just looking at average true range. But when you get a big move, they immediately market makers hit the road. What is the soliloquism I'm looking for? They run out of town. That's why it's usually like I'm much more interested in a change in liquidity that doesn't seem to be related to any kind of volatility in the market, right? That's when it gets interesting. Do you get this indication, especially when it's a rise in liquidity and you get this indication that somebody's getting involved in the market, right? Well, must say, by the way, this move down in the treasury is much stronger than the move up. And actually, it's about 10,000 contracts down. So I think that gives us potentially some good, I would still prefer longs. I think I'm a little, man. Will they just fall through the bottom here? We're really close to that 25, right? Are oil exporters now short selling opportunities? Oh, hey. Gary has a new article. Why you start traders may not be what they seem. I think he's gonna say something that I really agree with. I mean, I could try hitting into 3.305, but it's a little hot in here today. May just be in my head, though. May just be me. So I'm a little concerned. So, like, the liquidity at 27.5. So, they are putting up, like, good offers. So that I think gives me a little bit more confidence on the downside. But the immediate liquidity around here is not super strong. So it would not be very difficult at all for them to spike things back up to, say, 28. Is kind of why I'm hesitating. It's like someone got picked off there. Well, it's looking heavy. Okay, there the 5-year getting into new prices. Yeah. 30-year dragging a little bit. So we may be seeing some flattening here. I mean, they're all at the lows, but the 30-year is maybe a tick behind, right? The spread over the last 2 ticks has been flattening. Been a pretty active morning for the treasuries, really, from that perspective. Oh, wow. Okay. So there was a relatively large order at 25. They immediately hit into that with 800 contracts. And there is no, I don't know if any of that canceled. I can't tell anymore. This is where that stacking and pulling column would be useful, but they hit into that pretty aggressively. That kind of makes me think that this has still got a ways to go. Like they wanted to hit into that. They wanted to get that liquidity before it was gone. Well, for now, quite a bit more activity at the 25 half, and the 30 years still kind of lagging. So I'm kind of going through my head now. How many lots could this be? It's already been about 11,000 contracts short. Um, Quite forceful, really. It's the beginning of the week. They could, they're going to be setting a direction for the treasuries, and I think that they would like to be pushing it down. So I'm kind of wondering to myself if this could be an opportunity for another really strong trend like we've been seeing. Really strong trend continuation. But, the liquidity is still only at thousands. So I am a little bit weary about possibility of it rushing back up. This trend is certainly a lot stronger than the trend that was moving up that we passed on, right? Yeah. Well, it can pull back at least. I'm curious about that volume that went off at 25 because, they really wanted that liquidity. There's 1,600 sitting there, you know. Like there's plenty more to sell in this area if you have a lot to sell. But for the time being, they bounced pretty hard off of it, didn't they? I just have all of these pictures flashing through my head of it all of a sudden rising or falling really quickly off of some news or something. But I think that just a little on edge because we are in a pretty low. Yeah, see, look at that. They came back like what, 6 ticks there on almost nothing. So is that a great pullback opportunity, or is this gonna like reverse hard? The 30-year in particular really swept back there, didn't they? Hmm, 27.5, huh? So 27.5 is kind of the upper side of this distribution that we had around 26.5. Wouldn't say it's a huge distribution around 26.5, but it is definitely there. And it seems like they're not able to push below that. The time being, at least. Newest US Bitcoin ETF will allow bears to profit from falling prices. They approved a short Bitcoin ETF? What? It must not have like actually been approved or something. I'll read that later. So now this last little move up has some weird stuff going on with it, right? Because the 10-year seems to be lagging a little bit. But I'm not seeing any real significant difference in volume or a liquidity between the different instruments to explain that discrepancy. This is enough of a pullback, though, that this scenario that was starting to go through my mind when we first took the short, it would trend down strongly again today. Seems a lot less likely now, doesn't it? Let's see. Well, it's coming back the other way almost just as easily. And Marco Rubio is on Twitter quoting Psalms. Okay. That seems, and the scripture that he's quoting in Psalms kind of seems, I don't know why he would do that, why he would quote that. Hmm. Okay, back up to 29. I don't know. So there's a possibility that they get sucked back up to the 115.30 area, right? There's a little bit of volume there before they took off, and there's a little bit of volume on the way back before they plunged lower. Kind of looks like a point that could have some gravity. What's that? Seeing some shuffling? Huh. Interesting. Some shuffling, and then they sold 29 half 200 contracts, sold 29 only 57 contracts. So bids look weak. Bids look very weak. 80 to take 28 half? What the heck is going on? Well, okay, so they bought it up at 28 half. Very low liquidity here, it seems. So that's not necessarily the best action for us, is it? When it seems like it doesn't take very many contracts to make it move, and we're not, the trend is not entirely clear. Center it right there. S&P 500 kind of did something weird too, took a little hit. long yields to peak in 3 to 6 months, says Danske Bank. Hmm. So there was a little bit of something. Okay. There's a large offer there in the 5-year as well. Didn't stick around. Oh, there we are. 800. No, that's not a ton in the 5-year. So now you moved it down. Oh, that's curious. He just got filled at 11. Yeah, down tick. Think this guy on 11's gonna get paid? Let's reset again. Ouch. So they're kind of battling it out here now. There's a little bit of back and forth going within this range. What's this big order in the 30-year now? They took it. There's a few bids here. That's curious. Yeah, that was a change. I'll take that guy. Well, not too happy about that one. I'm not too bummed about it, though. I'm just a little like, they're still kind of chilling at 30, so a lot of this move started off of the open. So we are kind of in the timing area where we could start to see some more movement, but for the time being, it looks like it's up. So what price did I get out at? 294. Okay. I don't know. I think that the larger thing here is still rising rates overall. Certainly seems to be more participation on the short side, but that it's flying back up in our face really quickly. Now, some of it may be driven by the 30-year, because I'm not really seeing a whole lot of buying volume coming into the 10-year, and in fact, the volume in the 5-year looks like it's sell, but the volume in the 30-year is buy. So we could be getting this as more of a spread trade. The 5-year sure came back there. Well, there's a large order at 12.75. Hello, Hydro. Did I already say hi to Octavius? If I didn't say hi to Octavius out loud, I certainly did it in my head. Ah. Hmm. Look at that. Nope, that was a terrible hit. Terrible hit. Okay, well, maybe it works out for me anyways. Got 10 minutes before the S&P 500 opens up here. And we're starting to get some pretty pretty wavy action here in the Treasury, right? Always the last words. What is that? I didn't like that. No, I don't. Mark Zuckerberg lays out the future of Meta. I think he's absolutely. No, I don't want to get into that. We've already talked about that. Okie dokie. We've got baby cam. Just my luck, he's probably going to start crying profusely as soon as she leaves. Too bright for you guys to see on the camera. Famous last words. Hopefully it's going to work out for me. Yeah. Well, so did you see what happened? I hit into it and I ended up hitting into the bulk of the liquidity in the micro. And then it ticked down. But then the 10-year took or 10 and 5-year took another 2 ticks down, and then it put me in the money anyways. So my exact timing wasn't great, but like if I'm getting hit with a market order, I want to see it pull on me. right? I want to hit into it and the other offers pull and me, maybe even a tick up and me immediately be in the money. I have to say though, this move down has been accompanied by other kind of light ticks down. Though the volume is coming in the 5-year. So maybe still flattening. It's kind of interesting because it looks to me like the volume is coming in and flattening, but whoever's putting these spread trades on aren't getting paid a whole lot out of it yet. You say stocks look bull today? I think so. I think that they want to do a short squeeze, man. Uh-oh, his eyes are open. Go back to sleep, little one. How long do you think it takes her to get back? Let's timer. I think it'll be 10 minutes. I'm really rethinking having taken that whole, I don't know, getting out the way that I did. No. Yeah, it was bad. Could have just held on, right? Could have just held on. It's okay. I think I should keep in mind the action though, right? Like that down move was pretty good, but it reminded me a lot of the up move, right? So I would really like to see a move back to the low and some pushing through volume down at the lows. We're not quite getting yet. No, I don't want to see it go, oh, actually, we're just going to screw around with you over in here. All right, 5 minutes. Oil also looks betomid here. I don't know what you mean by that. I think there was a spelling error in there. Oil has been pretty well. The candles are real wide over in oil. There's a lot of randomness over there in oil right now. It hasn't really picked anything too trendy yet. That one might get some more consistent movement though, and when the S&P 500 opens. You know what? She should have just brought me the baby down here. Then I wouldn't be like stressing about it. You've been going to what did you come from? One of the problems that I have with a lot of these, I'm going to call them alternative platforms, right? Because in my mind, it's like if you're using the DOM as jigsaw, then the industry leaders seem to be Sierra Charts, NinjaTrader, and Trading Technologies. So the rest of these ones are kind of like newcomers to the field, right? And the issue that I see with a lot of these newcomers is that they don't really have any kind of key feature or thing that they do so incredibly well that it would make me want to pull over from another platform. I use multi-chart slash. Well, if you were using multi-chart, I could see that, but Ninja, I'd say they're about on par. I have to say, like, Ninja is not perfect, right? You use Ninja for the ecosystem, really. The selling point of NinjaTrader is the ecosystem for sure. Pro tip, now is an excellent time to withdraw from BlockFi if they'll let you. Yeah, exactly. If they'll let you. They've gone back and forth at 27 quite a bit, so there appears to be some sort of a liquidity hole right there. Just go straight to yeah. Well, I wish. I would really like to see a cheaper entryway into that, because, like, to do it right now, you're going to go get Rhythmic API Plus and pay $100 a month, right? And connect it into r/Python. I wish that there was a platform like NinjaTrader that was just, had an easy hook into Python. You can hook Python onto the back of NinjaTrader, or really anything else, frankly, with a socket. Just do it that way. But that would be like a custom solution. There's not something out there that, like, lots of people are messing with, and that there's lots of examples and people working together on. That's sexy. You know what, though? I think a lot of people sleep on R. There's some nice things about R. Like the thing is that Python is not well suited to that kind of use case. They developed a bunch of libraries to make it fit into that use case, whereas in R, it's all built into the language. That's what's nice about it. CQG allows the Excel function natively? Okay. Okay, so I'm not seeing thousands trade yet, but this is a little bit more like what I was hoping to see when I was saying, I want to see them really bust the lows. But look at the 5-year. There's some liquidity down there at 09 quarter. They kind of backed away from it. They got close to it, but the 5-year already kind of backed away from it. S&P 500 opening here with a buy. Let's just say, okay, let's just do this. Okay. I'm not going to manage that one over in ES very much, though. Okay. I'm focused over here. Yeah, so they're coming down to the liquidity in the 10-year, but they're not touching it. Okay, well, as long as he's moving, we're okay, right? Yeah, there they go in ES. And the delta is starting to look strongly positive over there as well. But the 5-year, well, I'm actually wondering here, like, so the 5-year hit back. They ran away from that liquidity, right? I always say, like, it changes. Sometimes the liquidity, it's like a magnet, and sometimes it chases them away. And in this situation, they got close to it, and then it kind of chased them away. But the 5-year came up hard. The 30-year didn't really. But I think that it was kind of more like the 30 years kind of been just going okay. And the 5-year kind of was more like a rubber band, went too far and snapped back up. U.S. Supreme Court rejects challenge backed by Elon Musk to Securities and Exchange Commission's so-called gag rule. Oh, there she's back. Okay. So the micros moved a little bit more on that downtick. Now they're hitting into that liquidity at 25. See, I wonder if we'll see. Nope. Okay, guess not. I was going to say, I wonder if we see a level break set up here. I think 500's not enough. A little bit pulled at 25. Isn't enough to make a clicking sound in my ear, but a little bit did pull. Okay, so only 630 to trade it. Oh, actually, they did end up trading what was there, but they kind of pulled to do it. It's good. It's good. It looks like they're moving largely because the S&P 500 just looks really bullish today. So where was it? It was at 09 and 09 quarter, wasn't it? In the 5-year, that was kind of like the liquidity holding as well. There's a lot of offer on the offer there. And okay. Want to see that 5-year bust through 09. Oh, okay. They're going to trade through it without a whole lot trading there, aren't they? No? Maybe not. Seems a little uncertain. 2,000 at 24.5. Aha. Okay, 935. Not too bad. Okay. Ooh, wow, and that really went. So now what we're seeing is a push through quite strong volume. So you know what is something that I used to do all the time that, I was just thinking about this the other day. I was like, really when I think about it, this is one of the things that that has changed the most in the way that I trade over the past few years is that I used to always get really interested when I saw big trades, or rather like lots of volume at a specific price or an iceberg, because that was like a spot that I could potentially get in and like take a reversal or something like that, right? But since then I've realized that that big volume can sometimes be a sign to just not get involved, right? So there was some big volume pushing through that liquidity quite aggressively. I think speaks well to how strong the sellers are today. But in the short term, big trade can always be a spot that they will potentially get stuck. I'm waiting for my wife to walk back upstairs. I haven't seen her yet. $30. So on the pullback, the 30-year came back a little bit harder, I would say. A little bit harder than we would like. I would say it looks to me like we're getting pretty solid downtrend in the treasury today. I could see it going much further. But these are really hard trends to hold, aren't they? These have been messy trends. There she is. Should have just given it to me. Said you should have just brought him to me. Watching it on the screen is like stressing me out. Yeah, but I'm like all worried Dave's gonna wake up and I have to go up and get him. There goes the spoos. Popping off. Well above the overnight high. Should we try and call some upside? Oh, well, Okay, so since Friday was such a strong trend today, you know, we could potentially have all sorts of single prints and so forth. Next interesting spot is at 63 to 72. Let's say 63 to 73. So we're just kind of on the edge of another higher range in the in the ES. So we'll see. Okay. So I'm definitely still seeing. Okay, that time the spread moved. So that time the flatteners got paid. Okay. How high do you think the S&P 500 goes here? So far that chart is looking awfully attractive. You seen that? You see that in the upper right? That's a sexy chart. That's a sexy chart, all right. There's a lot of activity going on in the 5-year. It's almost double relative to what it would normally be at this time. I think the biggest black swan event could be a Japanese bonds and blow. It, absolutely. Man, whatever goes on in Japan could cause all sorts of crazy stuff either way. So I'm looking for the liquidity hole in ES, but I don't know if I really have a good handle on it. So I think what I'll do is I'll take most of them off at 500. I was hoping that the treasury was going to go down for another new low, but they pulled back a little bit more again. So should say that that downtrend came right when it should have, which would suggest to me that the next one will come at close to the top of the hour. But we've got the housing numbers, right? Existing home sales. We're expecting a change of negative 3.74%. That could be a number that could affect us significantly here. Since the lows, the spread has been a little flat. Shouldn't say flat. I should say like it's not really changing. It's been a little stationary. So I'm not liking. There was, a push through pretty strong liquidity down in here, but they have since floated back up. So S&P taking a little bit of a dive there. So it's just kind of a trickle, and then tick up. That's not good. Darn. So this is right back where if we think continued downtrend, then we want to get involved right here. But I'm not liking this at all. A little bit. That was a good trade. I came all the way back. How much did I get? Actually, how many favorable ticks did I get? 22? Man, I don't know, man. To get 22 favorable ticks and then give it up. But I guess that's just what the volatility is, huh? High volatility. Not the best amount of trend today. When I got to $20, I probably should have closed it, right? And right back to that magnet too at 30. I'm kind of thinking about how much more opportunity we might have if I really wanted to take another one. Because you got Jigsaw. Wow. So you already got Jigsaw. You don't have a broker yet? So what I would do is, if you're just going to use Jigsaw, then I would probably go to somebody like Edge, Clear, or AMP and fund a small account. And you're going to pay like $50 a month for the data. But, well, it's not quite that much. It's more like $30 a month. But anyways, and then just trade sim. Just trade Jigsaw in the sim mode with whatever the instrument that you're going to do, right? That's the, because you can get demos that last for about 2 weeks, right? But for longer than that, you're gonna have to fund an account. So you just get like $400 together and put it in an AMP futures account, right? That's probably the cheapest way to do it. Yeah, I think I'm gonna say that I'm probably not gonna take another trade. Because it kind of pains me to say it, that it's like, if it's going to come up. Okay, so if you want to use NinjaTrader or Sierra, then you basically have to use their data and their brokers if that's the way that you're going to go. So if you're going to go Ninja, I would go and download the Ninja, the free version of Ninja, and use their free data for 2 weeks. And if everything works out okay, then you'll fund an account with NinjaTrader. Unless you're like in Canada, then you have to use GF brokers, I think. And Sierra, I'm not exactly sure what the deal is, but I guess Sierra has their own feed called the Denali feed, I think it is. But I don't know which broker you use with them. Yeah, you can get like a 2-week trial on CQG data and then a 2-week trial on Rhythmic data. But really, you might as well just go and fund a small account. It is hot in here for whatever reason. I don't think that it's actually that hot, because when I come over here and I look on my phone at like what it is, and it tells me that the entryway thermostat is 70. But I'm going to bet that in here it's probably more like 73. I have to say, I probably should have expected. Yeah, okay. Like knowing what the liquidity was and our tendency to snap back and everything, on that one that was a winner, I really should have been a little bit more looking more to taking a profit. Your PCs are working overtime and putting out heat. Well, I don't think that it's working any harder than it usually does, but we're getting into the summer. I think what's going on, it's probably time for me to change the thermostat, actually. Let's do that. We're gonna change it. So like right now, it's probably trying to heat a little bit at night. And what we really should be doing is we should be telling the Nest to just only do cool. There. Cool it to 69. That should get us some air in here. Vents open should give me some air. Because what happens is the airflow in and out of this room isn't very good. I'll put a fan in the doorway, pointed up so that the cold air gets shot to the top and pushes the hot air out, and that works really well. That actually works really, really well. And there's another little push up. So I'm sure glad that I bailed at break even. When it was coming back there, I was sitting there thinking, well, this is probably is a good spot for them to try and continue to make another move lower. But I'm thinking about it, and I'm like, yeah, but oh, hold on a second, what's going on? That's weird. I'm just gonna turn. Dinobot has been stupid. So does he not have rolls regulars? Hmm. There we go. Max pain is the price in which the greatest number of options will expire worthless. I am getting the air. I'm feeling it. It's much better now. Hopefully it does. I was like, hopefully my volume profile comes back because I really would like to see that. I'm interested to see here now if buyers can hold above these prices. Oh, so I'm talking to Gamma Trader in Discord about the video today, and he was saying, "Oh, your idea sounds a lot like Max Payne theory," and I'm like, "Oh, I screwed up because it's not my idea, right?" I mean, like I mentioned them, but I really should have emphasized more that the reason this has become a thing is because the really big market analysts at Nomura and Goldman Sachs noticed this change and started tracking it. Why not spread the tux against the tut? Whoa, okay. Now that's an interesting take. Wait, how would you explain to me, as Akshay, how trading two spreads against each other like that would work? Except for that, I don't think we can do that with micros. I guess what was I? Yeah. Okay, so here's the thing. Actually, I think what I really want. I think that right now, one of the things that would be most useful to me is to find statistical abnormalities, or at the very least understand the statistical behavior of the treasury spreads themselves, right? So maybe it doesn't have to be a trade itself, but just me at I've been trying to find stuff in research. I've searched for search terms many times before, but I've never really found the thing that I'm looking for, which is like what does the distributions of spreads really tend to look like? Is there an oddity that's really consistent, right? So I think that's what I really want from spreads. I do really want to find some sort of an opportunity where essentially something that could be really complicated but would be accessible to a small retail trader, you know? So what you're saying about tux versus tut does sound like that could be along those lines, right? So for that, I'm not quite sure how you would do it here with the micros. ZT is common between them will cause you to have outright directional position in ZT, but the actual spread would be between TN and ZN. So are you saying I would have like a certain number of contracts long in the 2-year, and then a certain number of contracts short in the 7-year and the 10-year? Here's the news. Okay, so the existing home sales changed -3.4 versus -3.74. So it was not as bad as anticipated. Existing home sales a little bit higher than they thought. So that's good. It is pushing the treasuries down a bit. I'm kind of fearing this. I'm feeling the FOMO again. I'm like, I want to go long here, and I think I want to keep out of it for the time being. Okay. So you're saying TN and ZN will be hedged against each other, and ZT you'll have a directional bias in it. Now Octavius might be right that if we try and do that with micros, there might be a lot of costs. Okay. Oh, whoa. So you would hold about 1,700 overnight margin. That's even like after the span requirements, or it looks like the treasuries are continuing to move up. This is really odd behavior today. When the treasuries were moving down, it really looked like a strong trend to me, and I was very much thinking this could be another situation where they have strong trends like we've been having the past week, and that it was going to continue. And now that I'm looking at it, it really makes me wonder, like, is there actually anything going on in the treasuries here? It's starting to look very random to me. I think that initial move at around 6:30 that pushed us down was for real, because there was some strong volume in that. That was about 10,000 contracts. But after that, kind of seems like meh, you know? So this is all very interesting to me. But that still kind of says probably not the best time for a speculative play in the treasuries, is it? Probably better to just let the ES just continue to go. Hey, NASDAQ killer, how are you? How's it going? So for this one, Akshay, I'm not sure if what you're explaining would be a trade that I would outright do myself, per se, but I really want to understand it. And I took 2 losers, but they weren't huge. I think it was like minus 15 today. And then before I decided, nah, this isn't good action for me. I'm a little disappointed because the first one, or the second one, was like a good winner. And the first one, I didn't need to give up on it. So I probably could have come out today up 10, but mistakes were made. I was going long rates. Long rate short treasuries. Just tell me, let's just do it in number of contracts. So like the minimum size trade, how many contracts would it be? Because that's the way that I tend to think about these, is like, if I'm going to do the knob, it's 5 to 2. So if I'm going to trade 2 of them, that would be 10 here and 4 here and so on and so forth, right? Is the dog upstairs? I can hear him growling in the thing. Yes, is running far today. Yes, it is. Three one of ZT, ZN, and TN each. So are you saying 3 ZT, 1 ZN, and then 3 ZT, 1 TN? So in reality, 6 ZT, 1 ZN, and 1 TN? I've been meaning to update my spreads to allow multiple legs. Oh, no. Wait. It would be... No, I still don't understand. Because it would be long the ZN and short the TN. So I think what he's saying is one long ZN, one short TN, and then a certain number long or short the 2-year. And I think the reason why he's saying what he's saying is like that's still a directional bet, but the amount of risk that you're taking on is like teeny tiny. So you're selling 3 ZT and buying 1 TN, and then buying 2 ZT and selling 1 ZN. Oh, so net it would be 1 contract of each, right? Would be what? Yep. 1 short ZT, 1 long TN, and 1 short ZN. Okay. Okay. So I'm gonna pull this over here. I think there's a better way to do this. There's a way to make it so that you can add as many different legs as you want. But I'm not going to take it that far. Now let's copy this whole thing, make a new one. SBS spread multi. Generate 1. Control A, V. Make 1 ratio. Like 2. Like 2 ratio. Leg 3. Leg 3 ratio. I'm gonna pull it over here. That'll be a little bit easier for me to. I really liked your order flow series videos. Are there any others planned in the pipeline? So at the moment, I don't have any more videos specifically about order flow planned. And if you would like one, what I would do is I would pick on something that you thought was particularly interesting in the series that you would like to hear more about and leave comments about it. So everybody kind of is just like, oh, this is great. You know, I just kind of say, oh, okay, I guess we've told them everything that they need to know, right? But if people start having questions about a certain thing, then we can like go more in depth to any one of the, especially the stylized behavior of markets, right? What I got planned right now is to I'm making some videos about the treasuries specifically. So I'm trying to get more into instrument specific information. Well, when we were up there, I was kind of saying, "Hey, I should go short again." Hey, look, it did it, but it hasn't broken the lows. So it's still kind of like you're taking the range. So if I had taken that one, maybe made the 15 and taken it off. That's what I was kind of saying. So is this the one that ends up running because that's what I would have done? We'll see. Let's just keep an eye on it. For now, it seems like it's being difficult. Okay. Plus bars array of 3. The stylized behavior videos. Yeah, I think so. I mean, the thing that's so interesting about it to me is that it's such a well-studied area of market research that retail traders don't know anything about. It's, as far as I can tell, the information that is the most pertinent to them, to retail traders. But nobody ever talks about it. I don't know if it's because it's too complicated or they just thought, it doesn't really actually matter. Oh, what's this? Oh, hold on. Both of those babies upstairs are making moaning sounds in their sleep. Neither of them sound happy about mom being gone. Front leg does not exist. Oh, yes. Leg 1. Leg 2. Leg 3. Equals string dot empty. We'll make all of these ratios 1. Yeah. I wonder if the Abby is still in the room there with him because it sounds like Asher is talking to somebody. Well, I guess it's a good thing that I'm not in a trade again, because otherwise I'd be super stressed out about maybe having to go up there again. Do you see how neurotic I really actually am, that such a tiny thing stresses the heck out of me? Okay, so let's do minute bars. Yeah, sure, 5 days. Okay. Indicators. Spread multi. Okay, so Fooey. Okay, so I've noticed the bug already. Leg 2 ratio. leg 3. Leg 3 ratio build. Does it matter where you get the data from? If I find Ninja, I get free data and I can connect to Jigsaw. Yes. You use a bridge for that. You use the NinjaTrader bridge, you can get the data in through NinjaTrader and send it out. Does it matter where you get the data from? It doesn't matter if it's CQG, Rhythmic, or whatever. If you're using the bridge, it really doesn't matter. Anything that connects to NinjaTrader and then forwards the data. But typically, it's going to be either Rhythmic or CQG. I prefer Rhythmic, but right now I'm actually using CQG. If you choose to go NinjaTrader, you're basically you have to use CQG. So you don't get a choice. There's all of these little strange nuances about like which broker and data and stuff you pick that, you know, but you're taking the right approach, right? Is first you want to decide which software you want to use and like your main way of trading. And then you can pick which broker you want in your data feed. Okay, so let's try this again. Spread the multi. Yes, okay. Okay, so leg 1 is going to be ZT, and it's going to be -1. Leg 2 is going to be ZN, and leg 3 is going to be TN. And what was Akshay saying? Oh, we're going to be negative ZN. So leg 2. Oh, so then let's do it this way. Leg 3 will be the ZN, and leg 2 will be the TN. So that it goes positive, negative, positive. Okay. Dipla. Fingers crossed. Nope, doesn't like me. Probably because yep. Need to expand this. Bars required to plot. Control C. Oops. Or is the dog up there? Yeah, they're all whining. I think Asher's awake now. If you do data comparison in your review, well, I don't know. Like, yes and no, right? If you have two data feeds up next to each other, there will definitely be differences for sure. Yes. But to say that one is better than the other, a little bit more difficult. That's what I would say. On bar 23, index was outside of the bounds of the array. 1, 2, 3. Current bar 0, 1, 2. Oh, because I didn't add the other data series. Dun, 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 dun. Oh, sure enough, they are moving back up in the treasury. So, yes, if I had taken that trade, I would need to have gotten out. And if I hadn't have gotten out at a good spot, it would have come back on me. So, Da, 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 da. So let's just come back in here to our indicators. Make sure that I put it in there right. You know what? Let's fix something here, shall we? Order 0. Here, 1, 2, 3, 4, 5. Okay. Okay, CT is -1. And then TN is the one that we're going along, right? Buying 1 TN. Okay, so leg 2 ratio should be 1. And ZN ratio should be -1. See, I did get it wrong. I was like, I think that might be wrong. Uh-huh. Uh-huh. Well, if we had taken that trade, we'd be losing money today, right? We need to do the opposite of that. But I think actually wasn't necessarily saying, oh, this is a trade you take, you tend to make money off of X thing. He's just saying like, this would be like the minimal amount of risk to put on, right? Like the amount of margin you'd end up using off of that would be super tiny after span. This spread has stayed in about a 16-point range, really? So if I come back here and I go do it on like a daily basis, let's see if it'll give it to me. I guess the thing is that I was expecting the price to come out of it to be pretty small. I thought that the number would be small. 90 is a little bit, -90 is a little bit bigger than I thought it would be. Between 98 and 90, that is an 8-point range through the whole chart history. And it does appear to be somewhat mean reverting, doesn't it? That's the thing that I find interesting. Like there is definitely like some strange mean reversion behavior in treasuries. Like it really cannot go too far without it there being that spreads are incredibly mean reverting. So I don't know. Interesting to have that up and going. Yeah, it's at 16 because CT is quoted double unlike other ones. So you're saying that I should put 2 in them? That'll probably just make it more negative, right? Yeah. I'm wondering what would be give you more smaller number 2s. I'm just going to minimize that. So you'll probably say something that'll make me want to pull it back up. So like when I think about it, like, okay, you're a retail trader, where should you trade? Right? And I continue to come back to this thing that, like, well, we know that the markets are statistically efficient, but not very informationally efficient. So um any kind of like market making low risk strategy that you would want to come in and pull off is unlikely to be available for you, right? Because the ones that would be available, the reason that they're available is because not even the robots can make money from them, right? So that keeps bringing me back to probably your best play is to be more speculative. Like if you see spec sheet ZT and Z3N are 200k face value, the others are 100k. Oh yeah. Anyways, but in the end, I think that the speculation is a difficult game. It's a much different and more difficult game. I think that everybody would very much prefer a more systemic kind of a strategy sort of a thing, right? Well, so then I was getting into, oh, well, okay, but we know that like momentum is a thing per se on higher time for like how CTA strategies work. So actually, it gave us a paper the other day, and I went and I read that, and when I read that, I kind of realized, oh, okay, like it only works over a really wide range of data. So you can't just come in and trade one instrument with the momentum. It's not like that. What it is it's you have like 20 instruments up, and the ones that have the most positive momentum you go long, and the ones that have the least positive momentum you go short. And that's how they generate their alpha from that. And it tends to generate about equal to what the index is. It's like, okay, I get it now. It's a portfolio strategy, not a single instrument strategy. Right. So I think for when we're looking for trades, new kinds of strategies for retail traders, I think that we're looking at something that's either going to be, one to three instruments that you're trading at once, preferably just one. But is there something you can get out of just one and use the market data to pull it out? I don't think you can. I haven't found it. Maybe in spreads, maybe. I don't know. That dog is being stubborn. Get him a treat. What else were we? I feel like there was some other things where I was supposed to be talking about here. The only others that we have to talk about is politics. I got into politics on TikTok. People are a little frustrating because they're coming in like the whole thing was like, okay, here's what Biden's doing. And then all these people come on, well, Democrats, they tend to perform better for my business than Republicans. It's not about that. It's not about that. It's about this specific situation, right? I don't care. But you're trying to pull out some statistical thing about whether I think that's flat statistics. I only care about what is the situation right now, right? So I'm debating with myself whether I want to make a video about that or not. Or if I would rather just get off of the political oil thing. There is this one guy, I have to say, you know what I find frustrating? Is when people with larger followings than you come in and make a comment on the issue that completely misunderstand your post. So you get all of these people, they're going on, because there was a guy who was talking about, okay, well, but are Republican or Democrats better for businesses? A lot of oil companies did poorly under Trump. And it was like, yeah, but we weren't talking about that. That doesn't freaking matter. You were like, yeah, see, this person is... No, he wasn't even talking about the same effing thing. He completely changed the subject. He didn't understand what we were saying at all. What were we trying to say? Oil is high. It's high because of the environment. That environment is unlikely to change anytime soon, unless we have a full-on recession. What is the thing about that environment that is the most likely to change? Who's in power in the politics? Because Joe Biden is fumbling this issue so badly, it's going to hurt his party, and it's probably going to hurt him in 2024. But because Joe Biden is president, that kind of limits what Congress is going to do. So you're stuck in a situation where this isn't going to change for another 2 or 3 years. What does that mean? Oil is likely to stay relatively high for the next 2 to 3 years, and that puts a cap on growth. I think everybody has this idea that, oh, okay, like some people seem to be rooting for a recession, right? And they think, oh, it's going to be a recession, and then I'm going to buy the dip, and then I'll be rich. Now, that's not how it will go down. If we have a recession, that's not how it will go down. What will happen is we will go down, and instead of having like a V-shaped recovery, et cetera, it will be skid along the bottom for months and months and months and months, right? We're just going to go sideways is what's more likely to happen. Current economic environment, as long as that oil is up there putting a cap on growth. We can't grow too much. We can't grow faster than our oil supply. Right? That's what we're saying. It's like, guys, this is a bad thing. You got to do something about it. And they're not going to do something about it. Okay? So whether Republicans in the past or what Donald Trump did in the past, doesn't effing matter. It doesn't effing matter. Right? How do I get that across to people? Because it seems like that on TikTok, there are just these groups of people that are just like mesmerized by individual creators and aren't thinking for themselves. So there's this other creator that came in and really, I responded to their thing, and then they came back and really ratioed me. But everything that her commenters were saying was absolutely stupid. Like none of them were actual points on the actual economics that we were talking about. Most of them were talking about that I was bald and a man. Who fucking cares? We're here to make money based on our knowledge of the economy. Right? How do you get people to understand that? I don't know. I don't know, man. Actually, Joe is doing good? No, it's not at all. So let me explain what I was explaining in my TikToks that lead me to say this. Okay. So the oil getting like above $100 a barrel, that for sure is Russia's fault, right? But oil was headed to $100 a barrel anyways. All of the analysts none of them thought that Russia was going to be the thing. All of the analysts were saying that we were going to get to 100. Okay. Like there was supply and demand problems in the oil market overall. The United States underinvested in oil production, but it wasn't just the United States. Everybody did. So even OPEC, while they were sitting here saying, yeah, we can totally increase production to keep prices reasonable, et cetera, they didn't actually have the capacity that they claimed that they did. Okay. Is that all Joe Biden's fault? Not necessarily, right? But every little thing that Joe Biden has done since he's been in office. Oh, the sarcasm was lost. Oh, okay. I gotcha. Okay. I'm going to continue anyways, right? Everything that Joe Biden has done since he's been in office has been negative for oil supply. Okay. Now, the bigger problem is that we knew back in February that the oil market was going to become a problem. Then the Russia thing happened. Then it really became a problem. And now it's been what, 3 months? Remember when they were saying, oh yeah, Russia can't keep this up at past May? But I guess that was when they were attacking Kiev. Now it's different. But even now they're kind of saying like they're running out of manpower, that they might have to actually declare actual war. So now it's been 3 months later. So there's really been like 4 months ago when Joe Biden could have maybe like changed policies or something, and nothing's happened. And he just will like, he blames the oil companies. So like, here's the thing, even if you admit, even if we assume rather, for the sake of argument, that there's nothing Joe Biden can actually do to improve supply in the oil market, you got to at least look like to the voters that you're doing something about it, right? And he's not. He looks completely impotent, right? And it's been 4 months. It's been 4 months, guys. This is why Joe Biden's approval numbers look so absolutely terrible. It's not just that things are going poorly. It's that things are going poorly, that there's a lot of reason to believe that part of it is at least because of him. And now that we are doing poorly, he's not doing anything about it. That's why his approval numbers are so bad, right? Else Joe. I when you said else Joe should have already delivered Utopia, I should have read that as sarcasm, but you know, my ADHD brain, it doesn't pick up on sarcasm very well. Man, it looks like the treasuries are just determined to settle at 115.30 today. I don't know if they can get away from this price. So I don't know. What do you think? Is it worth trying to make this point to TikTok? Because there was another comment that was about what's a volume profile, which I've answered before, but I'm like, well, we can talk about what the volume profile is, I suppose. But when I think about it, really, it's like, yeah, there are some people that like my videos, okay? Like they got certain number of likes and stuff. But you know, I had to come in and you know, smack down Donald Trump too, because they were saying, well, yeah, but Donald Trump had $2 a gallon gas. And people were like, well, yeah, but you can't really claim that. Is right. It really probably had nothing to do with him, and it was only $2 like during economic weakness, right? So I guess it's good that you were able to avoid it getting above $3, but whatever. So what I've really done is I've gone and I've pissed off the Joe Biden voters and I've pissed off the Donald Trump voters, right? You can't, if you actually want to speak the truth to people and want to give them the information that they need to navigate the markets successfully in the current environment, you basically have to say something that the majority of people, or rather the cumulative effects of all of the information that you're going to give them is going to result in everybody being unhappy on some point or another. And now you kind of sit back and are like, oh, and this is why most people just tell people what they want to hear, because then you get something out of it. So maybe if I'm going to pick politics on something like that, I have to just like stay in my lane, only piss off Joe Biden voters, maybe. I don't know. I don't know how I would go about that. My sarcasm was lost even when I used the meme spelling. Oh. Actual. Oh, I didn't even catch that you spell actually that way. Oh, actually, I'm so dumb sometimes. All right, let's come over here to Twitter, see if we got anything. U.S. existing home sales retreated for the fourth consecutive month in May. They're now 8.6% below their year earlier level. Properties typically remained on the market 16 days in May, down 17 days. Well, that's still like that's still like a really hot market, isn't it? It only takes 16 days for a house to sell. Yeah, not really seeing too much. Not really seeing too much happening here today. Well, we have gotten a little bit more from ES, but it does look like right here is as decent as any other of a spot to take it. So I'm going to close that position. So I'm going to have that sitting around screwing up my stats. Worked well. Supreme Court ruled religious schools can't be excluded from a main program that pays private school tuition for students in areas lacking public schools. Oh. Next SCOTUS opinion day is this Thursday. Yeah, because they're all waiting to see if the decision on abortion. There's going to be the last one. They're going to leave it to be the last one. That's what they're going to do. Yeah. First pictures of Uvalde shooting emerge as city hires lawyers to block evidence. Oh man, that's going to be such a mess. That shooting is going to get so much attention just because they're basically going to have to sue the city, right? By the way, I forgot to mention oil did take a little jump up here. It's still kind of like just at the high end of today's range, but most other assets, I have to say, like this rally, it's definitely pretty broad based in the indexes, at least it seems. I'm interested to see what the breadth stats are for like individual equities, but I'm not really seeing anything moving in anything else. So I think that does very much suggest that this is a short covering rally. I'm gonna put that on Twitter. Why did ZN go up after the open? Just, I don't know, man. To be honest with you, I am not sure that any of the movement in the treasuries is actually significant today. I thought that we were building some trend and stuff, but now I'm looking at it and I'm like, that might just be because we're still in a high volatility environment, and because it went up and back, and it's kind of just keeps getting stuck at this liquidity hole at 115.30. So I don't know if any of those moves in ZN meant anything. I feel pretty confident in saying that the S&P 500 is having a short covering rally. That's what we were predicting to happen, and took a trade right off of the open. It worked out really, really well. I don't think that position ever even took any adverse excursion, did it? Okay, 4 MAE. Man, that is good. That should have been a live trade, man. I mean, I took that with 5 micros, but that still would have been like $100, right? Yeah. Could have made $100. Wouldn't have taken even more than $5 adverse excursion. Easy trade. Why not? Oh well. And how did we make that trade? We were informed. I took that baby too. Well, you taking babies now? What? Why not trade ES? There you go. Wow. Is this? Oh, this. I wish that Jigsaw doesn't always put the date on their blog, so this could have been like a blog that I haven't read. Okay, so this. No. We want to read the Gary Norton video. In the mid-1990s, I learned a very important lesson as well as 2 phrases that I always keep in mind when I hear about star traders or investors. I was at a major investment bank, and my bank had just recruited 2 very well-known traders from arguably the most admired trading desk in the world, the Solomon Brothers proprietary desk. These guys had huge reputations and had worked alongside other star traders such as John Merriweather. I will say at this point that they were both really nice blokes. Even though our trading philosophies, particularly regarding options, were very different, they were always polite when telling me I was wrong. And then he puts a subnote on that. My colleague at a bank who was an excellent trader was asked to join this new team, moving from his position as a bond trader. The stars were creating a new proprietary trading desk separate from all the other trading desks in our forum. They had their own small trading room to the side of the main treasury trading floor. The new traders struggled from the start. After several months, my colleague called me and suggested we go to lunch. He was one of the funniest men I ever met in the city of London, so I was more than happy to meet him for lunch at an upmarket Indian restaurant in the city. Over lunch and jokes, discussion turned to the star traders. They were on huge remuneration packages, including guaranteed bonuses far exceeding what my friend and I were earning. Yet my friend and I were far more profitable for our firm. That's when my friend told me 2 things that will stay with me forever. He was astonished by some of the trading decisions of these quote-unquote star traders. Gary, he said, it's all smoke and mirrors. You and I are playing the wrong game. While we are trading the markets, these guys are trading their careers. Yeah. It took a minute for that to sink in. Essentially, the aim of these traders was to build reputations for themselves so they could move around for large and guaranteed bonuses. Or, conversely, if we're streaming, the objective would be to take trades to garner attention rather than to be consistently profitable, right? Their reputations were based more on where they worked and the size they traded rather than their P&L. They spent almost as much time and effort talking to headhunters and managing their careers as they did managing their trades. Indeed, after a year or so at our bank and in having suffered significant losses, the star traders were sacked, yet they were still able to negotiate big dulls at other large banks based on their reputations. Whenever I hear about star traders or investors, I always bear this story in mind. In fact, during my time in the city of London, I worked with other traders who had huge reputations, yet were actually awful traders. There are people who are making small and large fortunes in this industry based on media profile rather than trading or investing ability. Some have been clearly shown to be consistently wrong in their ideas or investments. I'm thinking about one well-known CNBC host and leading innovation ETF manager. Yeah, they continue to attract huge interest and have built powerful and lucrative careers. Actually, Jim Cramer is not consistently wrong. There's been a number of people doing studies where they showed that actually he was making money, that he was better than the market. I think that it's more a problem of everybody's following him and he's public, and he made money when he was a hedge fund manager. So now Kathy, on the other hand, yeah, that's totally, she just got lucky and is making money from all of the media hype. Yeah. Okay. Think about all the hedge fund managers who have blown up spectacularly, yet were still able to start again with large injections of new capital. I've often thought about the fact that I supposedly played the wrong game. I focused on trading markets while others were trading their careers. However, for me, this is not the wrong game. I am simply not comfortable playing the other game. My warning is to be careful of the stars. They may not be what they seem. As always, keep on. Yeah, I think he's right. Oh, so what was his footnote? They were adamant that options should only be sold, while I was an advocate of buying options. Oh, I gotcha. Their former colleagues subsequently lost significant sums to my desk from selling us options. While the star traders at my bank didn't sell to me, they consistently told me I was wrong about the trade, even as the trade was making exceptional returns. I gotcha. You know what? I prefer to be long options too. I think that the short options game is like the game to play if you have the money, but I think that there's ultimately more available for you going long the options. It's just a question of, just like with everything else, it's just a question of having good trade selection, right? Have good trade selection, and then when you make money, you're going to make tons. Okay, guys. Well, quiet day in the end. I did take 2 trades, but it was pretty tough trading. If you haven't seen our video about how to take advantage of gamma hedging, make sure you watch that video. It's the last video we posted on the channel. And I'm would love to see your comments on that. Make sure you leave a comment on the video, ask a question or comment about it, so that because I think we could probably go into a lot more detail about the subject, right? So seems like it's something that people are interested in. Anyways, it's time for me to get going. Think about what I'm going to post on TikTok today, which way I want to go. But I got some other stuff at work I'm excited to get finished. I'm hoping that they're all fixed today. So I'll see you tomorrow. In the meantime, stay profitable, or at least don't blow it all. Oh, you have a question? Okay, I got 3 minutes. Quick. Ask the question. You can always ask me on Discord too. In fact, I'm actually thinking, by the way, guys, if you're on Discord, you should hop in Discord. I've been thinking about during my regular working hours, sitting in chat a little bit more often so that we can just chat. Why would I hedge my gamma or delta when I have a complete 100 share position against my short position? Okay, so yeah, that would be one to ask on the video. But essentially, the issue is that if we run into a situation where the market starts going beyond what they were pricing in, then the people will have to add to their hedges. Like, they're already hedged, but once it moves beyond a certain point, every bit that it goes, that's more shares that they have to hedge. That's what it gets into. Claudio, thank you very much. All right, now I really gotta go. Ask that question on the video. Stay profitable, friends, or at least don't lose.